It's time for segment 3, Market Matters, where we examine what's relevant today in the ever-changing real estate market, and it's made possible by buyingandsellingla.com because what matters to them is you. Email them at buyingandsellingla@gmail.com and get started today with Southern California's premier real estate team. The topic for Market Matters: show me the inventory. I like that.
A lot of people saying that.
Did everybody else picture Cuba Gooding Jr. and Tom Cruise?
Yes.
Show me the inventory! Say it again! Show me the inventory!
And right now, this is such a... I mean, if we've gone in different directions with this question before, this is one of those that I wish I had a crystal ball.
But it is today's market.
It is today's market. The inventory is obviously short. It's obvious if you're entering into the market and you start writing those offers, you're going to get a rude awakening that your multiple offer situations within 24, 48 hours. I mean, unless that property's like way overpriced, but even then you'll have people still write something and send something in, you know. Is it going to go up anytime soon? I don't think so. We talked about maybe a surge because a lot of these buyers who were underwater are now breaking even, and maybe they're finding their time to get out.
They were just looking for an excuse to not short sell.
That may surge a little bit. As far as the inventory from the banks, what they're doing right now, they're trying to figure which direction they want to go. Right now, they're trying their method of sending properties more to auction for investors in bulk, which is taking opportunity for the traditional buyer right off the bat, or the short sale listing. Those are greatly reduced, obviously. Mm-hmm. I'm feeling it. I'm affected. I think maybe it's going to be could start happening at the fourth quarter, maybe the end of the fourth quarter, maybe the beginning of the first quarter, where we could see an increase. Maybe the method they're using right now doesn't work out as well as they think, or maybe a lot of these homes that are being bought up by investors are rehabbed or fixed up and starting to return back to market, and maybe that's another surge that follows.
If you sell 1 million homes to investors who are simply going to turn them around and flip them, then approximately 90 days from that point, you're going to get that same million homes back on the market.
But a lot of those homes have a deed restriction on them, anywhere from like 60 days or 90 days, so they may not be able to just gobble them up and flip them in a couple of weeks. They'd have to wait the timeline.
Which they're not doing. Wall Street has created a new monster called rent-back securities. Yeah. So what they're doing is they're bundled. Exactly. Yeah. Now it's kind of scary. I mean, I'm reading about it, and a lot of people are saying it's the new subprime. The problem is you just don't know what's going to happen. Mm-hmm. So demand is so high for rental properties that it's changing the landscape of neighborhoods. And when there's such a high demand for renters, they may be reducing their qualifications for what kind of renters they put into these homes in the middle of neighborhoods. They could have higher maintenance costs than what are expected. So investors right now have kind of created this interesting little thing, and you never know what investors are going to do. I mean, investors, it could be, it's going to be close to a year. They could be looking at their cash flows and the returns. The investors that are buying rent-back securities could lose their romance in the product. And then because all of these real estate investment trusts, these REITs, have put all of this money and bought all of these homes and created this huge surge in equity, now they're sitting on these big, huge portfolios full of equity, and they can not worry about renters, not worry about property management, not worry about all these costs, and just put them back out on the market. They're obviously not going to dump them. They're not that dumb, but they could start trickling them out there. So there's definitely that possibility.
Well, I don't know if you could say they're not that dumb, because
hey, easy, don't bite the hand that feeds you.
I'm just saying sometimes you might, unfortunately,
what we say is dumb may make sense to them on paper.
Financial institutions have a tendency, unfortunately, to feel like they're the only ones that have this great idea. Mm-hmm. But they don't understand the domino
like hiring
effect,
Big Bang Frank.
No, that was a fantastic idea.
That was a beautiful
more
idea.
of them should hire.
Because it rhymes.
It does.
So this is what I see. I see a four layers of possibility for increased volume of properties on the
Sounds
market.
like a tiramisu
It's like
or something.
It's like an 8-layer
Exactly,
bean dip.
tasty.
It is.
So the
See,
first
I
one,
went with the sweet side, and you went with the
I did.
bean side.
the first would be, as you spoke of and we spoke of, possible bailout of those that are starting to break even. Okay, that could be probably the sooner than the later.
Yeah.
The next could be the investors that have been buying a lot of these properties, starting to put them back on market.
Yeah.
Okay. The third could be that things just aren't working out with the method the banks are using, where they are forced to go back and start finishing those foreclosures again,
Yeah.
and those come back to market. And I think the longer term could be the play that Scott just said, where they had them under a 1 year or a 2 year lease, and those 1 or 2 year leases start to come to fruition, and then they start dumping them then, you know.
Yeah.
So I do see increases here and there. I just don't know if there's going to be a big dramatic increase like we had 6-7 years ago, with massive portfolios of default just flying out there, flooding the market and bringing everybody's value.
You know, there's actually, I mean, there's a fifth layer that's probably not going to be
A
nearly
fifth
as
layer?
prominent.
Is that the guacamole?
There is. That's the chip.
You went with the cherry. I went with the guacamole. I don't know what's going on here anymore.
And it's
Cats
just
and dogs
it's
living
the
together.
small investors. It's the onesies and twosies. It's the base hit investors. It's the guys that are buying 3 to 5 properties a year, and they are looking for the equity to increase.
Mhm.
They're not long-term investors. They're just looking to make enough margin to put them back on the market. And there's a lot of those.
Well, it's
I mean,
kind of cool. I mean, if
There
you
was a
have
lot
5
of those.
houses,
Yeah, there was a lot of those prior to the big the big trusts buying up, you know, portfolios of property. So we could start seeing those come on also. And I would say as soon as you see things start to cool off a little bit, so like interest rates are going up, I'm not seeing that affect demand at all. But if you start seeing property values level out a little bit, I think you're going to start seeing the inventory coming out.
Yeah, because then you'll see people saying, "Oh, I've got to get out now."
Right,
because
I don't
I'm
wanna lose
I'm not
that
building
equity.
anymore."
Right.
there you go. We just showed you the inventory.
The gamut.
Congratulations, everybody.